So, good afternoon, students. Myself, Dr. Lakshmipathy MG, working as a associate professor, Government First Grade College, Koratagere. My title is Financial Accounting. Today, I am discussing about the session number 3. The topic is Theoretical Framework of Accounting. Under this topic, I am discussing about accounting process and basis of accounting and branches of accounting. First, what is accounting process? So what is accounting process? The accounting process is a systematic series of steps followed to identify, record, classify, summarize and interpret financial transaction of a business. It ensures accurate financial reporting and helps in decision making. So, what are the steps in the accounting process? The first one is identifying transaction. Recognize financial transaction or events that affects the business. Example, sales, purchases, payments. So recording, journalizing, that is recording, journalize. Record the transaction in the books in chronological order using the double entry system. The third step is posting to ledger. Transfer the journal entry to individual ledger accounts to classify the transactions. So preparing trial balance. A list of all ledger accounts with their debit and credit balance to check mathematical accuracy. So adjusting entries. Make necessary adjustment for accruals, prepayments, depreciation, etc. to reflect accurate financial data. Preparing adjusted trial balance. A new trial balance after incorporating adjustments to ensure the books are still balanced. The accounting process. The accounting process is a systematic series of steps followed to identify, record, classify, summarize, and interpret financial transactions of a business. It ensures accurate financial reporting and helps in decision making. What are the steps in the accounting process? So, identifying transactions, recognize financial transactions or events that affects the business. Example, sales, purchases, payments. Recording, journalizing, record the transaction in the journal in chronological order using the double entry system. Posting to ledger, transfer the journal entries to individual ledger accounts to classify the transaction. Preparing trial balance, a list of all ledger accounts with their debit and credit balance to check mathematical accuracy. Adjusting entries, make necessary adjustments for accrual, prepayments, depreciation, etc. to reflect accurate financial data. Even preparing adjusted trial balance also. A new trial balance after incorporating adjustments to ensure the books are still balanced. Preparing financial statements. Use the adjusted trial balance to prepare income statement, that is profit and loss account, balance sheet, cash flow statement. Closing entries, transfer balances of temporary accounts, that is revenue expenses, are to retained earnings or capital accounts. Post-closing trial balance. A final trial balance prepared to ensure all temporary accounts are closed and only permanent accounts remain. So, reversing entries made at the beginning of the next accounting period to reverse certain adjusting entries. Simply, we can dictate the accounting process in diagram. Identifying, recording, posting, trial balance, adjusting, adjusted trial balance, financial statements, closing entries, post-closing trial balance. So the accounting process can be explained in another way. The first one is business transaction. Preparation of journal, posting to ledger, preparation of trial balance, preparation of financial statement, communicating the financial information. The first one is business transaction. The accounting process or steps begins with a business transaction. For example, rent paid, goods purchased. The second one is preparation of journal. With the help of business transaction, an accountant can prepare a journal. For example, rent account data to cash or bank account. Purchases account data to cash or bank account. The second one is posting to ledgers. With the help of journal, one can prepare ledger accounts. For example, rent account, cash account, bank account, purchases account, sales account, capital account, land and building account, etc. Preparation of trial balance. With the help of the ledger accounts, an accountant can prepare a trial balance also. So, debit column of trial balance indicates assets and expenses. Credit columns of trial balance indicates liabilities, incomes, gains, capital. And fifth one is preparation of financial accounts, financial statements with the help of the trial balance. That is, we prepare P&L account, balance sheet, and easily. And communicating the financial informations to the end users. Next. So we can discuss the basis of accounting. The basis of accounting refers to the method used to record and report financial transaction in the books of accounts. It determines when revenues and expenses are recognized in the accounting records. There are primarily two types. One is cash basis accounting, another one is accrual accounting. Cash basis, here actual receipts and actual payments are recorded. Credit transactions are not recorded and ignored till the cash is actually received and paid. So under cash basis account, transactions are recorded only when cash is received or paid. Revenue is recorded when cash is received. Expenses are recorded when cash is paid. Who use it? Small businesses, individuals and non-profits. Is there any advantage? Yes, simple to use. It reflects the actual cash flow. Is there any disadvantages? Definitely. It does not show liabilities or receivables. It is not suitable for large business or compliance with accounting standards. The second one is accrual basis accounting. Keeping in view of the demerits of cash basis, the accrual basis of accounting has been developed by the accountants. On the basis of accounting, the income, whether received or not, but earned during the period, is treated as income of that period. At the same time, whether the expenditure incurred or outstanding for the period, it is treated as total expenses of that period. What is accrual? Transactions are recorded when they are earned or incurred, regardless of cash movement. Revenue is recorded when earned. Expenses are recorded when incurred. Who used by accrual basis? Most of the business, especially companies following accounting standards like INDAS and IFRS. What are the advantages we are obtaining? It provides more accurate picture of financial performance. It matches income with expenses. Is there any disadvantages? Yes, it is more complex. It may not reflect actual cash availability. Even the third one is also there. Hybrid or modified basis. It is a combination of both cash and accrual basis, used in some cases for internal reporting only. For example, revenue may be recorded on cash basis, while expenses on accrual basis. Next heading, what are the branches of accounting? Accounting is a broad field that has developed several specialized branches to cater to different needs of users. Here are the main branches of accounting. What is the first one? Financial accounting. What is the main purpose of this? Records financial transaction and prepares financial statements like balance sheet, income statement, cash flow statement. What is the main intention? To ascertain the profit or loss and to show the financial position of the business at a particular date or time. Who use it? External users such as investors, creditors, regulators. The next one is cost accounting. The main aim of cost accounting is to ascertain cost relating to various activities of a business and to have cost control. So cost accounted as interpret cost data for the use of management in controlling current operation and planning for future. So what is the intention of cost account? It calculates the cost of production or services. What it helps in cost control and decision making, users, internal management. So management accounting, that is managerial accounting. What is the managerial? It supplies significant information to the management in order to discharge various functions like planning, controlling, evaluation of performance, decision making. It provides financial and non-financial information to manager for decision making, planning and control. Who users? Who is it? Internal users like company executives. Another branch is tax accounting. It deals with the preparation and filing of tax returns and planning for future tax obligations. The user is internal, that is business and external tax authorities. Next one, auditing. It examines financial records and statements to ensure accuracy and compliance with laws and standards. Who is it? Management, shareholders, government. So, forensic accounting. It investigates financial crimes such as fraud and embezzlement, often used in legal cases. Who are the users? Courts, police, lawyers. And government accounting. It maintains and controls public funds and ensures accountability in government financial activities. Users is government agencies, citizens, public, auditors. Even international accounting, it deals with accounting principles and standards used in international business transaction. Who are the users? Multinational company, global investors. So social responsibility accounting is the another branch. It measures the social and environmental impact of business activity. Who are the users? Stakeholders, society and NGO. So and finally, recall what we discussed earlier. It will be recalled. So accounting plays a vital role in recording, classifying, summarizing and interpreting financial transaction to provide useful information for decision making. The accounting process ensures systematic recording and reporting of financial data through stages like identification, measurement, recording in journals, posting to ledger, preparation of trial balance and the final accounts. The basis of accounting determines how and when transactions are recognized. The cash basis records transaction only when cash is received or paid, while the accrual basis records incomes and expenses when they are earned or incurred regardless cash flows. The accrual basis provides a more accurate picture of an entity's financial position. So accounting consists of several branches that cater to specific needs. Financial accounting focus on preparing reports for external users also. So cost accounting assists in controlling and reducing cost. Management accounting provides information for internal decision making. So tax accounting, auditing and social responsibility accounting are other important branches that serve different stakeholders. Together, these components ensure that accounting serves as the language of business, enabling transparency, accountability and informed economic decisions. Dear students, these are the references books available for your upgrading knowledge. So thank you very much.